Welcome everyone to the American Society Council of the Americas for Venezuela Political and Economic Outlook. We're going to be using the hashtag today, VC Outlook, if you want to tweet about it. And welcome to all of those watching us via webcast, and thank you to our sponsor, Telefonica. Katia?
Thank you all for coming. Thank you, Guillermo. Jaime will be here shortly, but I'll just introduce my other two panelists that are here. We have Francisco Rodíguez from Bank of America Merrill Lynch. He's the director and senior Andean economist there. And we have Alejandro Velasco, who joins us from NYU. He's an assistant professor of Latin American history at the Gallatin School there. When Jaime gets here, we'll touch on his things. He's the vice president and senior analyst in Moody's, where he covers a lot of countries, including Venezuela. So the way I'll structure the panel is basically, I mean, we all know Venezuela has become a crazy situation this year. Last year and this year, we started the year with another Latin American default, Argentina, which nobody seemed to really care about after it happened. I mean, it's incredible. It was the most peaceful default I've ever seen, and then everybody is so terrified of a different default happening. And nothing to have to do with contagion or anything there. So it just is emblematic of the perfect storm. And the situation in Venezuela was bad way before oil prices started to crash. Everyone was talking about this country's unstable, the situation's getting at hand there, money's disappearing, nobody knows where it's going. And then the oil crash happened, and it just sent everything into a downward spiral. And we have bond prices now in the 30s. It's just the implied probability of default from CDS is in the high 80s over a short period. So it's definitely gotten out of hand. So in that frame, in that context, we'll talk about the economy. We'll talk a little bit about investment strategies that are going on in this context, and then we'll also talk about the social impact, which I think is very pertinent in this instance because you have people really suffering there, a dire situation, and we have kind of what Ricardo Hausman touched in his article earlier last year, which is basically what is the implication here of the fact that bondholders keep getting paid where people have no access to baby formula. So let's get started then. If these oil prices are sustained where they are, if the status quo continues, can you or can anybody on this panel give me actually an exact answer to how many years Venezuela has before it runs out of money?
I could try, definitely. Look, it depends on what you mean by the question. Do we mean if Venezuela continues to do exactly the same thing that it's doing now?
Yes, status quo, everything.
Okay, but also exactly what that means, because look, Venezuela right now has a system of rationing, which is essentially a system of automatic rationing through exchange controls. So the less dollars that come into PDVSA, the less dollars that go to a central bank, the less dollars that go to the FX control agency, the more rationing that they have. So what does doing the same thing mean? Does that mean that they continue to ration? If they continue to ration at this level, then yes, they can continue to pay. What will be the social consequences of that? I think the social consequences of that will be pretty bad, and we're seeing those social consequences right now in Venezuela. You can't get an aspirin in Venezuela. So anybody who is asking the question, which markets like to ask and which investors like to ask, of what's the point below which you reach the limit that imports cannot fall and you cannot cut anymore? I don't know what that is, but I can tell you that if I tried to calculate that number, I would put in that number being able to get an aspirin, and you can't get an aspirin in Venezuela. But why can't you get an aspirin in Venezuela? Is it because Venezuela doesn't have enough dollars? Was it because Venezuela at $100 a barrel did not have enough dollars? Or is it because Venezuela has a big problem of macroeconomic management of those dollars? And I think that the answer is obvious. And we've seen this economy operate at $8 a barrel, $10, at $15, and in none of those cases were you unable to find an aspirin. But if you take any country in the world and have the central bank put a sign on its front door saying, we sell $30 for $1, then obviously there's going to be dollar scarcity. Everybody's going to be lining up trying to get one of those dollars. And this problem is extended to the goods markets because the people whom the central bank is selling those dollars to, the importers that it's selling those dollars to, the government is telling them, you have two choices. You can either use that dollar to bring in a good But then if we sell it to you at 6.3, you can sell it for a maximum 30% nominal return in a country with at least 65% inflation. Or you can sell that in the black market. And if you're selling in the black market, you can evade the inspectors that we have in the stores looking at what price you sell it at, and you can make an immediate 3,000% return. So my basic point is Venezuela has a system of relative prices that is diluted. It has a system of relative prices that is completely unsustainable, but the end game of this is that this system of relative prices has to go. This idea that it's a country that gives away dollars, gives away gasolines, gives away electricity. I went through the math of how much Venezuela spent in subsidizing those three things. By selling dollars at below equilibrium prices and selling gasoline and selling electricity, which are three different ways in which it gives away its dollars. Well, last year, it spent between $48 and $56 billion in that. So can Venezuela continue to do that? No. What does that mean? Does that mean that Venezuela is going to default? No. It means that Venezuela is going to stop doing that. At some moment, somebody's going to look at this economy and say, we have an economy which has $100 billion in debt and $112 billion to be precise in debt with non-resident units. It's an economy that has, depending on oil prices, between $50 and $100 billion of exports. That means that debt service is perfectly sustainable if this economy is reasonably managed. Sooner or later, either it's going to happen within this administration or the next administration, or the Venezuelan society is going to demand a better management of its resources. And once these resources are reasonably managed, then even at $40 a barrel, this is an economy that can perfectly well function. This is an economy that's sitting on the world's largest oil reserve. So I don't take as a reasonable given that this type of management is going to continue. And even if it does continue, what it would mean would be that you would be even less able to find an aspirin, and you would be even less able to find anything in Venezuela. And most probably that the government that would try to enforce that wouldn't be able to sustain itself. It's in power for very long.
Okay, so we'll go back to that in just a second in terms of sustaining itself. I was, in preparing my questions for this, I was going back to a panel on Venezuela that I had prepared many, many months ago and trying to look at from some inspiration from those questions. And they were almost exactly the same questions people are asking today, except oil was at 80. Mm-hmm. So people were freaking out even at 80. And I mean, now it seems like forever ago, but even at 80, people were concerned. So anybody have an answer? Maybe Jaime, what price does oil need to be for Venezuela to avoid default entirely?
That's a very good question, and I think that a lot of people have spoken about the fiscal break-even price, but that is not necessarily that relevant in Venezuela's case. This isn't a Gulf country where you need to balance the budget. This administration has clearly shown its preference for monetizing the fiscal deficit. And when you have all the distortions that exist in the economy, capital controls, price controls, you have a very captive domestic market in terms of the banking system that will continue to finance the sovereign. So financing the sovereign is not an issue. The issue is running out of dollars. And as you said, Katya, it's an issue where the oil prices have actually come down to a level where you're seeing significant amount of stress and where you're seeing a very large external funding gap that we estimate is likely to come into about $40 billion this year. So in order to narrow that gap, we're looking at an external situation where oil prices would have to be probably around $90 per barrel, which is less than the fiscal break-even price of over $100. But with $90 per Venezuelan oil basket, you can manage and you can actually muddle through as long as you manage to bring in other investment and other types of loans like the Chinese loans.
Okay.
I agree with that number. That's pretty close to my number. But at least in my numbers, they need $40 billion in order to maintain the same level of imports that they had last year. And that is not happening right now. I mean, it's evident that they're cutting imports. And if there are any Venezuelans here who've kind of tried to get dollars to travel abroad, you guys know that they're rationing imports and that they're rationing dollar allocations more than they were in the past. So, and more than they were last year. So one of the questions that we have to ask is, how much is Venezuela going to cut imports by? And then assuming a number for that, then how much can Venezuela spend from its resources? And that requires valuing how many resources Venezuela has, not exactly liquid resources, because the market gets very obsessed with liquid resources, and particularly for a country that has managed a lot of its resources in off-budget funds and in off-liquid assets such as gold, that's not really the most relevant indicator. You want to know what its liquidatable assets are. So what are the type of assets that Venezuela could turn into liquid assets, say, within the space of a year? So you want to look at the reserves, you want to look at the gold and reserves, you want to look at the market value of the Petrocaribe receivables, you want to look at how much cash does PDVSA have and other state entities have, how many bonds they have, the central bank balance sheet outside of reserves lists other assets in foreign exchange that mainly includes bonds. You want to look at the value of the refineries. People put a lot of emphasis on Citgo. Citgo controls 3 refineries. Venezuela holds 14 refineries outside of Venezuela. I'm not even talking about the assets that they have in Venezuela, the refineries that they have in Venezuela, the oil fields, all of which could allow it to raise money. But if you do an exercise of valuing all of those assets that I listed, I get to a number trying to value them at market value. So obviously you're not going to value Petrocaribe at face value, you value it at market value. You get a number of around $70 billion. And I think that means that if they cut imports as they seem to be doing by between $15 and $20 billion this year through rationing, and I agree with very adverse social consequences, but if they cut imports by about $15, $20 billion, goods imports and services imports, which totaled $58 billion last year, then that means that they basically need $15 to $20 billion off of these savings. Can they do that? Well, look, we're in January and we already had the announcement of the Citgo issuance for $2.5 billion, and we had the Petrocaribe receivables from the Dominican Republic from $1.9 billion. So if you need to liquidate $20 billion, and in the first month of the year you've already done almost $5 billion, I think that they're on track. So in other words, can they do this? Can they get by this year? I think that they can. Can they get by next year? With 70 going at depleting it at 20 billion a year, yes. When does Venezuela default? Well, countries don't default when they get to 0. Countries default when they run down about half of their foreign asset holdings within the space of 1 or 2 years. So at this rate, assuming that oil prices stay at $40 a barrel, which is the number that, at least in my numbers, corresponds to that gap, then I think that we're talking roughly about 2 years. But again, this is all with that very much ceteris paribus, which I don't think holds, because I really don't think that if we go through this year, next year, the government as we know it, administering the economy as we're seeing it administering it, is going to survive the electoral challenges of the parliamentary elections, the recall referendum, and just simply the huge popular discontent that is evidenced in today's opinion poll results.
Okay. But so just one question there. You said 70 billion if they liquidated everything over a period of a year. Mm-hmm. Do they have a year? I mean, in the sense of things got really bad really quickly. They don't have to spend 70 billion. I mean, 70 billion, they need 70 billion if the price of oil goes to 0. Okay.
Okay. If oil goes to 0, then Venezuela defaults. I'll grant you that.
Thank you for clarifying.
And if it stays at 0.
You're not always a bull. Okay.
No.
So just to touch on something you mentioned about the fiscal break-even is not that relevant for Venezuela. But when you adjust for the real exchange rate, Venezuela's debt to GDP far exceeds 100%. So, is there a balance sheet problem there that people seem to be ignoring? I mean, to give you an idea, I was speaking with some people that are very established professionals and asset managers, and they seem to have no idea that this was true, that they had over 100% debt to GDP.
Well, I have no idea that it's true. I think it's false.
Okay.
Yeah.
Well, all right. Let's have some debate here.
Oh, definitely. I mean, what you're telling me is that a country that up until recently was exporting $90 billion of oil has debt of about $100 billion, $113 billion. So you're telling me that it has no non-oil GDP, that Venezuela doesn't produce anything that's not oil? No,
okay.
No, I think that's wrong. But I'll tell you why it's wrong. Because what you're trying to do, and I appreciate what you're trying to do, I think it's something very difficult, it's to actually make some sense of Venezuelan numbers. And you can't make sense out of Venezuelan numbers, not because they're as bad. I mean, some of them are bad, but they're actually not that bad. I mean, that's the reason why the government's best solution sometimes is not to publish them, because the numbers are good and they tell some of the truth, but and it's too hard to meddle with them. But when you take an economy like this, and you put all types of controls on it, and particularly all of the type of pervasive price controls, the problem is not the exchange rate. The problem is the nominal GDP numbers. Nominal GDP does not mean anything in Venezuela, because nominal GDP is built by surveyors from government offices going to private firms, looking at their books and telling them and asking them, how much did you produce and what did you charge? And if you own a Venezuelan firm today and a government surveyor knocks on your door and asks you, can I see what prices you're charging? What are you going to show them? You're not going to show them the prices that you're actually charging. So their nominal GDP numbers are underestimating prices and therefore are underestimating nominal GDP. And then you're trying to divide that underestimated nominal GDP number by a realistic exchange rate, and you're getting numbers that don't make any sense. So how do we look at this? Well, there are many ways to look at it. Let's look at the one thing that's tangible. Let's look at exports. I mean, we have a better handle on what exports are. So let's look at the ratio of debt service to exports. We're looking at a ratio that at current oil prices would be between 25 or 30% of exports. That's high but manageable. At last year's oil prices, we'd be looking at 10%, which is actually quite low. So definitely this is not the case of the highly distressed debtors. If you look, another way to look at it is look at, you're essentially trying to get an idea of what's the value of Venezuelan non-oil production, because you know how much oil is, you want to see how much non-oil GDP is. It turns out that Venezuela is, to a certain extent, it's a simple economy in which you can look at this, because Venezuela is an economy that produces oil, and it uses what it gets for that oil to do everything else that it does. And quite frankly, if Venezuela stopped producing oil, or if the price of oil went down to zero, I think that the Venezuelan economy would go back into the Stone Age. It would basically be unable to produce, it is right now unable to produce any other relevant tradable good. And what that means is that non-oil GDP is essentially a multiplier of oil GDP. And if you look at this over the past 60 years historically, it's actually a pretty stable ratio. It's a ratio of 5 to 1. What that means is that if Venezuela at current oil levels is exporting $40 billion, then we're talking about a country that has a $200 billion GDP. And that means that its debt to GDP ratio is around 55%. If we're looking at last year's oil prices, if we're looking at $90 a barrel, the country is exporting $80 billion. And if then we're looking at roughly double of that, and therefore we're looking at a debt to GDP ratio of about half of that, which is actually a pretty comfortable debt to GDP ratio. I think that that's the way to look at it. I think that the idea that Venezuelan GDP is as much as its debt implies that it was as much as its exports last year, and there's something there that doesn't make sense.
Okay, what do you think?
Well, I certainly agree that, I mean, trying to make sense of the numbers in Venezuela is like trying to, recount the history of Macondo. This is just surreal. I think that it's true that you have to look at certain relative weights that can't be, debt to GDP, but rather debt to exports. The cost of debt, the interest cost of debt. And this is where we think that the fiscal side is not the real issue, based on the fact that the government finances itself at 16% domestically in nominal terms. It shoves banks, it shoves bonds down banks' throats because it's a very captive market. They have no other place to invest in. It's either that or depositing their money in the central bank. And with inflation running at 60%, you're trying to, as a banker, you're trying to find what gives you the highest yield, and that's simply government bonds. And at any point in the domestic yield curve, they're paying 16% coupons. So whether you go short or whether you go long, the government is the market maker. It's not the price taker, it's the price setter. So as a result, it's really paying negative 40% in real terms. So it's extremely inexpensive to finance itself domestically, and that's why it's been financing itself in the domestic markets, and the sovereign hasn't been tapping the external markets. They realized how cheap domestic funding was. And this is, of course, a result of the huge amount of monetary liquidity that's slushing through the system. So, you know, there is a situation where the government can stay outside the external bond markets, but perhaps PDVSA can't, because it can't necessarily finance all of its domestic operations domestically.
Right. Could we just briefly talk about the most recent adjustment to the FX system that they did? Basically, one of the aspects is they allow the dollar to trade freely and legally through brokerages. I mean, this just kind of sounds like CCAD 2 or CCAD 1 all over again to me. What's the difference here? Is it what people were hoping for, and is it effective? Or will it be effective?
No, I don't think that there's much of a difference between what they promised to do with CCAD 2, but this is actually quite typical in adjustments. If you look at macroeconomic adjustments and you look at the ones that are finally carried out, they look very similar to adjustments that were attempted and were not carried out. And the reason is that you try to do something and then some people oppose it, and if you go back and then you don't do it, but then you pay the cost of not doing it, and those costs accumulate. And that means that the next time that you have to talk with the people who are opposing it, all of you have costs from going through this process, and their position is weakened. So typically governments do this. They try one thing once, and they've been trying that. It's not just CCAD 2. When CCAD 1 was launched, it was also supposed to be a market clearing system. What I think is going to happen, I don't think that this system is going to by far solve Venezuela's problems. I think it is, and not even its exchange rate relative price problems. I do think it might actually get the government to devalue, to do some adjustment in its real exchange rate, and I think that it might actually open a system that is going to be free and which is going to improve the efficiency of resource allocation, because people, at least if they can't get dollars from the government, are going to be able to buy them legally. Now, am I sure that they're going to pull it off? No, because the same factors that existed that made them pull back, and particularly one key characteristic is their fear of floating. And they want to get down the black market exchange rate, and when they get this type of systems going, and they see the exchange rate go to the level at which it has to go to clear markets, then they get sticker shock, and they say, no, we can't let it go there, and then we have to control it. And it's actually quite difficult, and this has to do with what Jaime was saying, which is very difficult to open up the capital account with negative real interest rates unless you're really willing to let the currency float a lot, unless you're really willing to let it depreciate significantly. And I think that they get scared whenever they try to do this, and then they pull back. But again, we've gone already through 2 instances of it, and in all of those instances, what they've seen is that the alternative is not any better. And by not doing the adjustment, Maduro has gotten himself at 20% approval ratings, and the government is, according to current polls, almost assured of losing the parliamentary elections. So I think that the incentive for them to actually try to do it is that the alternative hasn't worked, and it hasn't worked politically. And that is the litmus test of why a politician will carry out an economic adjustment policy or not, whether it works for their ability to win elections and to stay in power. And right now, what they're doing is not working.
So, are you saying that you think that they'll do it and they'll pull it off and it will be the closer thing to a devaluation, or are you saying they'll pull back?
No. I'll answer that question in the following way. I think that this exchange rate system, as we know it, the system of these huge distortions in relative prices arising from the government trying to keep an artificial price for foreign exchange and for all tradable goods, is something that has its days counted. I don't give this system as we know it more than 6 months. Now, is this going to be what does away with it, or is it going to be something else? I'm not sure, and I do think that there's a chance that they pull back. So, which is why I would say, I think that if you ask me to make a call on it, I say, okay, I'm cautiously optimistic that this is going to go into the right direction, but it's definitely not going to solve the problems, and therefore, sooner or later, and probably within the next 3 to 6 months, they're going to have to do a major FX adjustment.
So it'll lead towards a change because it'll fail.
It will. No, definitely.
No.
I mean, definitely, the system is going to fail in the sense that you cannot. Trying to maintain the 6.3 exchange rate is something that is not viable. I mean, just that element. You would need, if you're very, very optimistic, you would need at least a rate of 100 to clear that parallel market. Now, if this is going to be a free market, and at the same time you're going to be selling dollars at 6.3, the arbitrage opportunities, legalized arbitrage opportunities, are just going to be so huge that so the system in itself is not going to function. The question is whether this system is going to take us closer to the taking apart of this whole FX control system, which has, for all purposes, come to its end. And it's pretty clear that it's come to its end. And I think that the Venezuelan exchange controls are currently on life support. And the question is, when does somebody sensible come here and say, it's time to turn off the switch?
Okay, so Francisco, a couple of weeks ago, Finance Minister Torres actually live tweeted that he was meeting with representatives from a number of asset managers and mentioned you. Everyone wants to boast that they're hanging out with you. So he said, what was the question?
Have you tweeted?
Oh,
Not yet.
I haven't tweeted yet.
Not yet.
No,
Okay, okay,
I'll
okay.
tweet in like a minute.
Okay.
What did you guys discuss? And if you can talk about it, what did you discuss? And what did they respond? Was there feedback? Were you like you're not doing so well, and most important, what was the most important thing that he said? And is that what's like leading you to say that you're confident they're going to make these changes?
Well, I said cautiously optimistic, and I said that, and I don't think that the system is great, and it's something that we conveyed to Mr. Marco Torres. Look, this is actually the fourth meeting that I have with Mr. Marco Torres with investors, and there are other banks that have had similar meetings. For some reason, apparently the ones that have gone into Twitter are the ones with us. And these are, what's interesting is that this type of meetings are very normal. I mean, in just about every country in the world, this is what happens. When you go to a country with a number of important fixed income investors, then the government meets with you and the government answers your questions. And what's amazing is that there was a very long period in Venezuela where this didn't happen, where it was impossible to get a meeting at the finance ministry or PDVSA, or at the very least it was very difficult, and it was never with higher management. And in that sense, I do think that Marco Torres has changed somewhat the style of management. He's very open. He actually sits down for very long periods. He discusses our ideas. He's not, his just personal style is not one of getting angry or defensive, but of listening and hearing, and also telling us about, not just about how he sees the economy, but how they see the political constraints that they're operating under, and how that's shaping government policy. What I think is most relevant, and for that reason, the information that one gets at these meetings isn't actually that different from the information that's publicly known, because not only because of regulatory issues, but because essentially the basic idea of this meeting is kind of to ask questions about that would help investors understand better how the government is thinking, why it's doing what it's doing. Now, what do I think is the most relevant fact that I got out of that? I would say two. One of them is I have for some time been convinced, but now even more, that this is a government that has a very high willingness to pay. Now, I don't know about the capacity problem. I think that the problem of this government is that it has such significant issues in terms of the management of its economic resources that you can get the mixture of high willingness and low capacity. But I do think that this is a government that essentially sees it almost as a matter of self-respect. I think that if they defaulted, it would be an admission of failure, and that's something that they very clearly want to avoid. And their storyline, the way that they see the political narrative, is the opposition is saying that we've failed at our stewardship of the economy. That's actually where the economic war narrative comes in, because the economic war, whatever you think of it or not, is a way of telling the story of we haven't failed. It has been this other external circumstances that have imposed these problems. Well, it's one thing to say, there aren't goods on store shelves because Farmatodo is hiding them. It's another thing to say, well, we couldn't pay the bond amortization in October because who hid the money? Who was it that took it? It's very difficult to avoid responsibility for that. And for that reason, I think that they have a very high willingness to pay. The other thing is that I viewed a much greater awareness in the government, not just in terms of the finance ministry, but in terms of other government representatives that we spoke to, as to what they were doing with the FX rate. So I think that at the one other difference between right now and CCAT 2 is that when you were talking about CCAT 2, Rafael Ramirez could explain to you what they were trying to do with CCAT 2 and that it was going to be a floating rate. But no government politician would tell you anything remotely resembling the fact that this was going to be a floating rate. Now you have a lot of government politicians who are aware. It's clear that it's been discussed, that they were told, we need to float this rate, we need to go. So that means that they've taken a decision, which is a firmer decision. Doesn't mean that they're not going to go back on it. I think that there are all of the dangers and all of the incentives to go back on it. But I think that at least the decision has been taken, it's been thought out more carefully. You haven't had an explanation of exchange rate policy that has been as detailed as what Maduro has given by the president, which also reflects a very a thought process that was relatively extended, in which different alternatives were considered. So that gives me a bit more confidence that they're going to try this harder than they did last time.
And I know this is kind of turning into the F-Rod show here, but what I just
Okay,
have,
so don't feed it. Yeah, don't
I
feed
just
it,
have
go
one
on.
question that's burning. I mean, Wall Street speculation for a number of months now, I guess, has been that you would be the person who would come along to fix all of their woes. I mean, everybody was, have you gotten an answer from him? Do you have any idea? Are you being tapped to be finance minister for Venezuela, or, and can you comment at all on that?
No. Look, I regrettably cannot comment on it, but I will give you an answer because we have a company policy, and I think it's a good company policy, and it's that we don't feed this type of speculation, we don't feed this type of rumors, and I think it's good because when you do it, you're not taking the arm's length view of the relationship that we have to have with the issuers that we cover. So let me answer the question in the way that I can answer it, which is if my primary responsibility while I work for Bank of America is to the clients to whom I advise, representing Bank of America, and I advise them to take the investment decisions that I think are in their interest. That would enter into conflict of interest, even with my having been offered and being actively considering a role in a government or in a firm that we're covering. So if I had been offered that position and if I were seriously considering, then the first step would have been to cease my covering Venezuela for Bank of America, and at no moment since I joined Bank of America have I ceased doing that.
Fair enough. But let's say you were. What would be your first policy step as finance minister?
Well, I think the first thing that I would do would be, number one, I would go down to the central bank vaults and check that the gold is still there.
You already did that.
No, still. No, look, and then maybe depending on what I find, the second one might be to get on a plane back to New York. So, no, look, again, answering the question is essentially feeding speculation. So let me answer it but let me not evade it either. The role of an analyst is also to assess government policies, and assessing government policies means saying, how do they compare to what the government should be doing, what the government could be doing given its possibilities and given its capacity and given its constraints. And I think that something that I've left clear in everything that I've written about Venezuela over the past 3 years is that I consider that Venezuela's most urgent economic problem is fixing its relative price problem. Venezuela has a set of relative prices that don't work. And you cannot take an economy where 60% of resource allocation is done by the private sector and leave it without prices. And the problem in Venezuela, again, is not that at $90 a barrel or at $40 a barrel, you don't have money to buy aspirin. The problem is that the price of dollars is completely out of line with anything that makes sense, and it creates these huge arbitrage opportunities. So So you have to fix that. You have to stop giving away those $50 billion that we estimate that were being given away. So how do you do that? You have to unify the FX rate. You have to raise gasoline prices, and you have to raise electricity prices. And to go back to something that Jaime was saying, which is I think what the essence of the Venezuelan problem is look, people say this is going to be very costly. It's going to be politically very costly, and that's why you can't do it, and you can't do it in a government that doesn't have the political capital to do it. I would kind of question that, because, I mean, what I don't think that this government has, this government, probably no other government, has the political capital not to do it. And we're seeing that right now. Not doing it is having the mess that they have. So I really don't think that they have any option but to fix it. I also think that Venezuela has the characteristics of a country where these relative prices are so out of line, and the rent seeking and the deadweight losses from these type of incentives are generating efficiency losses, which actually give you the opportunity to do an expansionary adjustment. And I think that you could get an element out of that. I also think that it's a country that has done and continues to do significant quantity adjustments. And that's the reason why, if you look at the Venezuelan budget deficit, that's 17% of GDP. Basically, what that's doing is that's financing cheap dollars, a dollar subsidy, a gasoline subsidy, and an electricity subsidy, and it's financing that with inflation tax and with financial repression tax. So why do I think that Venezuelans are not going to be worse off with this adjustment? Because yes, Venezuelans are going to have to pay more for dollars and imported goods and electricity and gasoline. And of course, if there are distributive issues that you have to take care of, you have to take care of them. So if the things that are going to go up by more are the prices of imported goods, of imported like primary consumption essentials, then you definitely do have to have a subsidy system in line for them. But the reality is that these subsidies as an aggregate are being paid out of Venezuelans' pockets, because they're being taken out of Venezuelans' wages, they're being taken out of Venezuelans' savings. So Venezuelans are going to have to pay more for those things, but they're going to have their wages and they're going to have their savings. And I think that if they get back their wages in real terms, their real wages, and they get back their savings, I think that they're going to be very supportive of what's happening, of what's being done.
Okay, so we'll get back to the wages and the social impact shortly. Wanted to touch on the Houseman debate and the Houseman article, which was basically, it implied that Venezuela, and it wasn't just him, it was also Reinhardt and Rogoff wrote similar one after, and then he had a little spat in the FT with this fellow over here. But so this question is going to these two gentlemen, because we already know your answer. So the professor's opinion was a bit more nuanced than just that Venezuela should default, or that a default was inevitable. It basically said, it called into question, it was an ethical question, basically, that whether should Venezuela default on bondholders if it's already defaulting on citizens every day through import shortages and rampant inflation, and basically, even through all this, even the most cold-hearted capitalists that I've spoken to have themselves questioned the morality of paying bondholders when the situation is so dire there. And then they're like, yeah, no, I should still get paid, but still, maybe it's not that ethical. So, you envision a scenario in which it would almost be logical if you had to envision a scenario where a default would make sense, you would think that this would have to be one, right, where the people are seriously suffering. It's imploding itself in every other way to bring. Why shouldn't creditors be imploding with it, right? So why, if they can't fix these problems, should creditors expect to be spared? Jaime?
Well, I think what you're coming to is a fundamental questioning of the model, and that's exactly what we've come to. This model could probably subsist forever if oil prices are high enough. But now what the low oil prices have done is they've pretty much removed the veil on all the distortions in the economy, which we knew that they were building, but they never led to specific amounts of pressure like we're seeing now. So, in terms of what Venezuela needs at the moment is dollars, because again, the model can subsist forever. If the government's willing to do, to continue easing monetary policy and providing excess amount of liquidity, capital controls, and exchange rate controls and all the types of price controls and everything. You can buy anything. You can buy every good and every service that this economy needs if you have high enough oil prices. But an exchange rate adjustment doesn't bring in more dollars to the economy. All you're doing is fixing the relative prices, as Francisco said. So piggybacking onto the other question about the what other means do they have of creating some form of exchange rate adjustment, is perhaps going back to the old permuta system, in which they issue dollars or dollar-denominated bonds, and then these people, whoever buys it within the economy, sells it outside, and in essence, you're bringing in more dollars into the economy. That's where, since the sovereign has been outside of the capital markets for so long, it's not bringing in dollars through the capital account. So you have a fixed amount of dollars in terms of the balance of payments coming in through the current account, and any type of financing that you can have, that you can find. But in the end, is it moral? Is it not? The question is this sustainable? And at these oil prices, it's definitely not sustainable. What gives balance of payment sustainability is indeed a default. Whether it's ethical or moral, touchy subject for a rating agency. But
fair enough. But you are a rating agency. So in past examples of defaults, when defaults have happened, have you seen a domestic situation that was able to, or like, have you seen this kind of imbalance where a domestic situation is sustained at a very terrible situation is to sustain there while creditors keep getting paid, or does everybody usually fall hand in hand?
It's very true. It's very true what you say. In the end, usually, the paternalistic government, because it seeks survival, it basically says, screw the foreigners. We're going to do everything that we can to try to help our people.
Yeah, and that, I think, is the irony that it's Venezuela that's in this situation. What do you think?
Yeah. First, I should say that I've much enjoyed this discussion, in part because I'm not an economist. I just want to highlight that I'm an historian, and in particular, I work with social movements, and I particularly work in barrio communities, so poor communities in Caracas especially. So my perspective is quite different. But it does get to the question of sort of the moral implications, and even though it might be difficult to perceive this, especially when we see the news about shortages and lines and what Francisco mentioned about aspirins, people experience these crises relative to their recent and long-term past, and also relative to their class position, right? So just to give you one concrete example, yes, it is true that there are lines and shortages. All of that is true. But of course, and we have also seen, for instance, an increase in poverty rates over the last year, and all indications are that we're going to see poverty rising again. But this is also coming off of a relative period of significant increases in standards of living, especially for populations who had for decades been extremely hard hit by things like the financial crisis of the mid-90s, before, of course, the previous bust in oil prices in the 1980s. And so the point that I'm trying to make here is that the situation is indeed dire, but it is not dire over the long term yet, right? And so there's a sense of flexibility that does not, at least to me, portend, at least especially coming from popular sectors, a sense that we are going to now rise up immediately, right? For instance, in the late 1980s, when we had the last major social explosion in 1989, that had been a period of 6 going into 7 years worth of highly distortioned economic performance. And so right now, basically, we're in year 1 or 2 of that, right? So I guess my point is that the effect can sustain itself for a little bit of time. I just want to end by saying one last point. We've talked a lot about numbers and break-even figures. I think the one that is most significant for the government actually is 50 plus 1. It's measuring its survival based precisely on the political calculus of whether or not it can outlast these coming elections. And what's significant, so 50% plus 1 would of course mean that they lose. And so this is the major calculus that they're getting at. How much can we withstand in terms of holding on to the policies that we have without them falling into the possibility that the opposition will win elections, right? because they don't really care about the hardcore opposition. They don't really care about the 40% or more, right? Or at least going back to the April 2003 elections when it was such a tight margin, right? They don't care about that constituency. They care about the middle constituency, right? The ones that are transactional voters, the ones that are not ideological hardcore Chavistas, but have their support for the government is contingent on performance, right? This is the performance that is now being curtailed, right? So the 50+1 figure is significant because it also dovetails with another, again, speaking in sort of economist language, the deficit, right? The deficit here is not so much a deficit in terms of fiscal policy, it's a deficit in terms of political capital, especially on the part of the opposition. What you find, and this is very curious, that even though Maduro is polling at 22% or perhaps even lower, that doesn't also translate into increased support for the opposition. Right, so it's in this universe between 22% of low approval for Maduro, but not yet 50+1 on the side of the opposition, that the government currently is sort of operating and it's sort of seeing its viability and its survival over time. So that's how it answers that.
So, okay, so you still see this level of flexibility that you don't see the people rising up and demanding a default, for example, anytime soon?
No, certainly not.
Wow.
I mean, I think that it seems to me that the bigger demand right now, and this speaks to the point that Francisco is making, what kind of impact, for instance, is the discourse of economic warfare actually having? And it's just actually surprising to me when I speak to friends and colleagues and in contacts in popular sectors in Caracas. Certainly for hardcore Chavistas, this plays well, right? And it's part of a long-standing narrative. For most people that are sort of just trying to get by, the economic warfare argument is actually quite thin. And it's thin on a couple levels. Number one, it's been going on for so long that now, of course, people are saying, well, we've been in economic war for 2 years. It must mean that we're losing, so we should do something different, right? That's number one. Number two, the effects, of course, now are being very much more immediately felt, right? And so, again, for these transactional voters, the issue is, we're supporting in part primarily because we don't trust that if the opposition comes to power, they're going to have our interests in heart. And even though, of course, we're now suffering, at least with these people who are currently in power, we have had some improvements in our conditions of life over the last 10 years, right? And so, again, it's sort of this deficit, this trust deficit on the part of the opposition that's sustaining these levels that would otherwise, I think you're right, immediately just suggest why don't people rise up right now, as one would expect.
So, one thing that's interesting, as the situation has really deteriorated in Venezuela, investors abroad, initially, everyone, initially the Capriles, hope the Capriles would win, and then recently hoped that somehow the government would be overthrown. As the situation's gotten worse and worse and worse, it seems like investors actually that I talked to have started to get concerned that a change in government wouldn't actually perhaps solve all the problems, not just because there's so much that you have to undo and fix, but because the situation has gotten so bad that a new government could come in and actually just have less of a reason to protect what could be seen as odious debt. This concept that this money has gone towards funding corruption, and we're not going to pay it anymore, and we're totally starting fresh, and some people are scared that a government could come in and do this, and they may have a reason to do this. What are your views on this? Could that happen in a new government, even a market-friendly government? Do you have any views on that?
I might say something that could be seen as inflammatory, controversial here, but and it speaks to the point that Jaime made about the model. I'm actually still curious what the model is. When I see Venezuela, and again thinking historically about Venezuela, Venezuela is not now, it hasn't been, and it won't be a socialist country. It's a petrostate, okay? And the reason why I mention this is because if you think about sort of the universe of the political class in the opposition, and you think about any kind of alternative that is being proposed to the actual model, there is none. Right? And so, you don't see people actively talking about, well, yes, if we came to power, these are the measures that we would take. Now, of course, there's an issue here of, well, we don't want to say the things that we want to do, but then this gets to your point. Well, this is exactly what happened with Carlos Andrés in 1989. He said, I'm not going to negotiate with the IMF, I'm not going to default, I'm not going to do these things, gets into power, 3 weeks later, does all the things that he said he wasn't going to do, and then you have this social explosion, right? So the issue here is that, the lack of an alternative to the basic model, which isn't socialism of whatever century, it's just petrostate, suggests that any kind of alternative is actually not on the table. And so that's what creates, I think, a tremendous amount of anxiety. And it's also what limits the horizons of people's political choices.
That's a really good answer.
I do have a lot of sympathy for that idea that, if the opposition comes to power, there's also risk of losses to bondholders through the idea of odious debt. Perhaps not a full-on repudiation, but some sort of, hey, we're here, we need some help, maybe you can give us some, small haircut, 20%, 30%, maybe we get through this, and then, we're all friends. And then we're gonna start winding down the basic tenets of the Chavista model. But I mean, two things that have to happen is that one, it's very unlikely that the opposition can come to power, as Alejandro said. They'd have to win 3 rounds for the knockout. The first round would be the legislative elections. The second round would be in 2016 for the recall referendum. And then the third round would be to actually win the presidential election in 2016 after a recall election. So 3 rounds. Maybe they make some gains in this first round. Perhaps that's what the government wants. And perhaps there's gridlock. Perhaps they can now blame the opposition for the gridlock and the fact that they're simply saying no to everything. And it becomes extremely hard for the opposition to manage this. Any change to the model will be extremely unpopular. And then you have the possibility of mass protests in that regard. Whereas it seems unlikely that you can see something similar to a Caracazo under the current government. So there's risk to bondholders in any scenario. The question is magnitude.
That really sounds like a damned if you do, damned if you don't. Yeah.
But in here, I actually I think that their chances of the opposition getting to power are much higher than what both of you said. In the best predictor of the share of votes obtained by the government party in Venezuelan elections is the presidential approval rating. Chavez was at 57% approval in October 2012, and he got 55% of the vote. Maduro was at 51% approval in April of 2013, and he got 51% of the vote. Right now, Maduro is at around 20% approval. I think that in the next polls that are going to come out, we're probably going to see him dip under 20. So these are very, very bad numbers. And by the way, this kind of statistical fact that I just pointed out, it's not unique to Venezuela, actually. Presidential approval ratings are very good proxies of the electoral performance of the government party in national elections in polarized systems and bipartisan systems. In fact, Obama went to his last re-election with 51% approval, and that's what he got as a share of the popular vote. So I do think that this is a very tight spot for the government, which, by the way, is not surprising. I mean, if you see the mess that the economy is in, and think, well, how are voters who have been traditionally economic voters, opportunistic voters, I think that these ideological cores are relatively small. People are voting for Chavez because they felt that the economy was going well under Chavez. And in the periods in which the economy was not doing well, 2002, 2003, Chavez's approval ratings were very low. Even at that level, Chavez himself, with higher approval ratings than what Maduro has, could not stop the recall referendum from occurring at 30% approval ratings. So Maduro with 20, probably less, I think it's going to be difficult for him to stop it from occurring. So I mean, I think that it's, there are a lot of possibilities that open up. I also think that we're going to get wild cards in here. We're going to get the wild card of potential changes in government policy as it reacts and tries to get way out, seeing its low approval ratings. I think that we're going to get also the possibility of gridlock. That's the one thing that actually worries me the most, that we go through a prolonged period in which you have an opposition-controlled assembly and a Chavista-controlled executive, and economic policies and even debt service can become collateral damage of this political confrontation. I think that we can look at a lot of scenarios. But if I ask myself, if the opposition gets to power, are they going to default? And if so, what type of default it is? I would go back to the following. There's one. You can kind of look at the discourse that you see right now, and you don't see that the default discourse has permeated very much, but you do see some of it. You do particularly see a lot of talk about, oh yeah, but the government's defaulting on all of us, but the government's an internal default. You see something actually which is, which as a bondholder is something to really keep an eye on, which is talk about Khedive arrears as government debt that's being defaulted on. And the issue with this is that the government owes $25 billion in Khedive arrears, which according to the private sector should have been paid several years ago, or they should have been paid already, some of it several years ago. If you actually take so Venezuelan authorities have never taken seriously the idea that FX arrears are external debt. And this goes back to 1989 when the Carlos Andrés Pérez administration found a similar level of arrears relative to exports than what's currently outstanding. And it said, you know what? That's not our responsibility because we've liberalized exchange controls and now you can exchange your bolivars at the market rate. So you're no longer our problem. So this is the typical response of Venezuelan governments before arrears. But if you actually believe the story that arrears are foreign debt, and then you say, well, Venezuela has $10 billion of debt payments plus $25 billion in external debt that it should have paid. This is $35 billion in short-term debt. Then, of course, the country is insolvent, and of course, the country has to default. So a lot of it has to do with what we understand as foreign debt and how these categories can get transformed in popular discourse. All of that said, there's a very strong structural incentive for Venezuela not to default. Why is it that Chavez in 1998 is talking about a debt moratorium, and when he gets into office, he forgets about it? Chavez said it himself in his 2004 interview book with Marta Harnecker. He says, if I had defaulted, this would have been the end of us. Venezuela would not have been able to survive. It would not have been able to sell oil. The reality is that the Venezuelan state is structurally different from that of most sovereigns that we look at. It's a state that's an exporter. And there is a risk, and it's a state that owns significant assets abroad. And there is a significant, substantial risk that if Venezuela defaults, bondholders are going to go after those assets, they're going to go after those oil shipments, they're going to go after the receivables generated by those oil shipments. And whether they will effectively, in the end, be able to attach them or not is not the relevant question. Because the relevant question is what is going to be the effect on Venezuela's cash flow of their defaulting arising from the uncertainty as to these legal actions. Because if I'm buying oil from Venezuela and I know that that oil is going to a refinery which might be attached, or that oil, I'm signing a receivable and then that receivable might be attached by a bondholder, then that means that I'm going to tell the Venezuelans, I might buy that oil from you, but you better give me a discount because I'm running a risk. Every dollar discount on Venezuelan oil is $1 billion of foregone revenue. A $10 discount eats up all of the cash flow gains from defaulting, so there isn't even a short-term economic gain to defaulting, not to talk about the long-run costs that all countries have to face. While this economic incentive exists, any government, center, left, right, that gets into power is going to look at this issue and is going to say, you know what, it doesn't make sense. Much more so if the country is not fundamentally insolvent, as I don't believe that it is.
So in this context, a lot of people have been, or a lot of investors I've been speaking to are trying to figure out how to play this. Do I play it through PDVSA? Do I play it through the sovereign? Short end of the curve, long end of the curve? What do I do? Do I short these and go long these? Okay, so the theory that a lot of people have been saying to me is, okay, I'll own I'll own PDVSA because they're less likely to default on PDVSA because of all the attachment issues and you know, all of the prospect of the fact that PDVSA is my money maker, and I don't want to potentially affect any money going into my money maker because then I have no future whatsoever. Jaime, have you ever heard of a situation where a government has defaulted on the sovereign but not on the state oil company or the major state company?
It is mixed. The issue is, for example, in Ecuador, where the government has defaulted, but Petroecuador has not, because at the time it didn't have any outstanding external debt, or external bonds, rather. But it's mixed. There's cases where the state oil company does default, Naftogaz, for example, and Ukraine does not. This was earlier in 2007, 2008. But in this case, that really is the question that a lot of people are asking. And it seems to be, and I remember you wrote an article about how easy is it to attach these assets, which for Venezuela it seems harder than for PDVSA. So, and the market does price, or at least accept, different types of yield for both the sovereign and for PDVSA. Coupons on PDVSA debt are usually lower than coupons on the sovereign debt. And the sovereign indeed has been outside the markets longer than PDVSA has. PDVSA needs the dollars in order to fund its capex, its investment program. It certainly needs to be present in the markets, whereas the sovereign might not need to be. And that then seems to imply that the risk on the sovereign would be slightly higher than on PDVSA. For the time being, at least in our analysis, we've pretty much treated them the same. If there is losses on one, there should be losses on the other. But I'm starting to be not too convinced about that. If there are no losses imposed on PDVSA for any reason, but there needs to be a default event or an event of some form of haircut or debt renegotiation, then the losses on the sovereign have to be greater than they normally would in order to compensate for the non-default in PDVSA.
So in your view, this theory kind of makes sense?
Yes.
Okay. Let's move on a little bit to the social aspect before we open up to questions. And I'm sure some of you have burning questions, and we're already at 7:09. So I'm interested. You made it seem like the situation hasn't gotten so bad, or at least it's not as bad as it was for the Caracazo in that scenario. So how is the crisis affecting the everyday lives of Venezuelans? How are Venezuelans adapting to living on what has essentially become worthless salaries? And yet they're not demanding, they're not up in arms.
Well, I mean,
they are.
Yes, I think that's the point. I mean, certainly they are up in arms. Of course, there was a long cycle of protests last year, starting in February and going well into April. One of the particularities of that cycle of protests, though, and one that we've done research on, is why wasn't at that time, why weren't popular sectors as broadly represented in those protests as one might have expected? And I think the answer there was pretty clear that, again, sort of the crisis had not elaborated, it had not elongated to a point where people felt that protests that were being billed as insurrectional or trying to get Maduro to resign were going to lead to any kind of alternative that was better for my living conditions in the immediate or even the long term. That situation is changing. You're seeing a lot more protests. Various organizations track daily protests, and you're sort of seeing an explosion of those. You're also seeing, of course, significant amounts of repression on the part of the government and dealing with those protests, which then generate more discontent, right? So, I mean, the cauldron is simmering, and there's no question, of course, that's happening. There are institutional avenues to ameliorate that cauldron, and so the elections, of course, coming up would be one significant one. On the other hand, I do want to insist on this point that as bad as the conditions are, right, shortages, lines that people have to wait on to buy very basic goods if they're there, and of course they may not be there, right? So that you probably heard about this, but people just make lines, not exactly knowing what's available, right? So you will buy something once you get in the front of a line, because you just need to buy whatever is available, right? But of course, even that scenario affects popular sectors differently from middle and upper classes. To some extent, and I don't want to suggest that there's an inurement process going on, but the lack of a variety of goods is actually not that anathema to the experience of popular sectors, right? In fact, the opposite has been true. The broad expansion of an available array of products, that's what's been different, right? So to some extent, this is sort of a return to something that is familiar rather than a regression into something that is actually quite unfamiliar. There's also actually still, there are subsidized chains, food chains that are run by the government. There's ferias. of food products that happen all the time, right? So there isn't hunger, for instance, which of course would be a very clear measure of this is a moment where we are going to take to the streets, regardless of what the alternative is, right? It would be a sort of a much more spasmodic moment. So that is where we're not at yet.
So we're still talking about a situation where the poorest sector of the economy is still getting all the benefits that they were getting before.
No, not all the benefits. They're certainly suffering, no question about it, right? But the suffering hasn't gotten to a point where, historically speaking, you might say, well, now it's even worse than we were 10, 15 years ago,
Gotcha.
right? So there's still a relative memory of it might get better if these people continue to be in power. However, we remember where these people were in power, and that was very, very bad, right? Which gets to the point that Jaime was mentioning before, and to some extent Francisco as well. I wasn't saying before that the opposition doesn't have opportunities to win. In fact, I think that you're absolutely right. I can't imagine actually a scenario in which the parliamentary elections are won by the government unless there's some sort of dacazo, right, surprise, and even then that would be palliative. The problem isn't winning at this point. The problem is what do you do when you win, right? And that's where the point that Jaime was making is dead on, which is if you get the parliamentary control of the or the parliament, then what, right? And if there's paralysis, that mitigates against the potential that you're going to be able to hold a recall referendum. Even if you hold it, you might not win it because, as you said, the government might blame far more than it can now the opposition for not allowing certain things to move forward, right? So it's not so much the winning, it's the what do you do when they win. And here's why the lack of alternatives, even just a discourse of alternative, is so problematic for the opposition.
And the lack of a unified opposition, right? I mean,
Sure.
who do you... I mean, you have Leopoldo Lopez in jail, right? And then Capriles, he's not in jail. I mean, does that weigh for him as the natural leader now, or is it still a break in society over the two leaders?
Well, I mean, first of all, so the parliamentary elections wouldn't put
Right, no, I know, but in terms
Capriles.
of who would corral the masses?
I mean, it's hard to say. I mean, it's. So polls, of course, place Lopez among sort of opposition figures as having the most popularity of any of them. Partly that's in part because he's in jail, so he derives some benefit, as odd as that sounds to say, right, in terms of just the raw polling. On the other hand, before he was in jail, he polled very low, right? And there's this sort of trust gap, this deficit gap in terms of what he could bring to the table, especially for sectors that don't feel themselves identified with him. Capriles is a much different story, and to some extent, the fact that he did so well in April 2013 speaks to a policy that the opposition had going into the October elections, but they weren't able to take it as long as they wanted to, which was to speak less about the abstract notions of sort of liberal democracy and freedom of the press, all of which are great, right? But they don't speak specifically to the issues that are pertinent in the lives of most certainly popular sectors where the core of supporters is chavismo, right? And so when they started speaking in that tone, look at what is happening to your paycheck. Look at you are unable to get to your informal sector job because you have to wait in line, right? You have to pool resources, all of you together, to do far less with far more money, even though it doesn't go as much as it was before. That discourse is actually what Capriles has done and has been very effective. So if they continue that, right? Capriles would certainly, to me, emerge as a strong figure, but he's undercut significantly internally by people like Leopoldo Lopez who are like, no, we just need to reach power. We don't really have to have a sort of a message behind it per se.
Okay. So what is the point where we do reach the potential for a social explosion? Is it a hike in gas prices? When do we get to that place, and how do we know if we're getting there? And do investors want that to happen? I'll start with you, and then we'll go to questions.
Yeah. Well, I can't speak to the issue of investors. I think I'll leave that to...
You answer first part one and then part two.
I mean, so as an historian, I can speak to precedent, but I can't speak to the particular situation now necessarily, But I think that it is important to recognize two things that are actually quite different, even though structurally they're similar to the late 80s and the Caracasa that happened then. The first is that the relative length of a crisis, we haven't reached that point, right? And so there's still, I think, room for flexibility in terms of a popular response. But the second is, again, I hope this doesn't sound too controversial. I think it's true, though. This government has, for all of its other features and faults, what it has done is very much placed the popular sectors who had previously been disenfranchised at the center of its imaginary, right? And so it is repressive, but it's repressive towards certain populations that it doesn't feel it needs to respond to, right? If it becomes repressive to the populations that it has placed at its core, then it completely loses any kind of credibility, right? That's the moment when you're going to see, and this is why this present sort of upsurge in protests is so significant, how the government responds to these protests that are not by middle classes and upper classes as they were, in February and March of last year, that they're far more about immediate impact of the crisis by popular sectors. How it responds to these sectors, that's going to be a huge marker of whether people respond much more violently than before.
First question about investors. I think that investors, if there's one thing that they're afraid of, is uncertainty and social unrest. And that's something that there's almost they're concerned with any type of uncertainty. And if you hold the bond of any country and you see across your Bloomberg screen flashing any news about riots or bloodshed or any of that, that's a negative. So it's something that does scare them, and it's a substantial concern. And I do think that the idea that social unrest might be brewing is a contributor to current Venezuelan spreads. Now, that said, I think, you see, the problem with social unrest and social explosions is that we don't really know how to predict them. And we don't even know this linear idea that, if people are worse, then they're going to go out and they're going to protest. It's not clear that that's true, actually. Look, the Arab Spring started out in Tunisia. Tunisia is the country with the highest growth and improvement in human development indicators of North Africa. So sometimes social unrest occurs because you have economic progress, and then people say, I can aspire to better things. I don't feel represented by this government, which is essentially kind of a government that corresponds to this a more backward society. If we know, for example, something that correlates with episodes of social unrest, it's unemployment, male youth unemployment, and it actually turns out that that's among the only economic indicators that doesn't look that bad in Venezuela. Venezuelan unemployment rates are 5.5% right now. I've struggled to understand why that is, and I think that people aren't looking for jobs because they're spending too much time standing online, actually. Which, by the way, tells you that about another problem where you do have a considerable difficulty to carrying out any type of adjustment programs. I think, going back to a book by Moises Naim, The Paper Tigers and Minotaurs, and I think it's a wonderful story where he essentially says, look, all of the problems that we thought that we were going to have and we were prepared for, we didn't have them. And all of the problems that we had, which didn't allow us to do what we did, were problems that we didn't expect. So things come out completely of the unknown here. I think that, for example, the fact that now many Venezuelans, not just higher income and not just the military, middle class and lower income Venezuelans are actually standing in line partly or totally to buy products that they can resell, and therefore they're kind of sharing in these rent-seeking arrangements. So what happens when you take that away? Because it's one thing to kind of take away a food subsidy from people who are going to be hurt by it, but their food prices are going to go up, and which you can probably compensate through policy. It's another thing to kind of take away people's jobs. If people have actually left their jobs and have devoted themselves to the job of being in line and taking advantage of these rent-seeking opportunities, what do you do with that? I think that is really a public policy problem that we don't know how to deal with because we don't have many experiences of doing this type of adjustment in this context, and we better put some thinking into. But I'm not worried that much. Admitting of our uncertainty and our ignorance as to the causes, precisely for some of the reasons that Alejandro was talking about, I'm actually not concerned that much about the social unrest. I also think that for social unrest, you need organized political actors that are willing and able to keep the fuel going. And I think that the opposition right now has its eyes set on the parliamentary elections. And the last thing they want to do is give the government an excuse to say, oh, you guys are burning up the country, so that's why we're going to suspend the elections. What I am worried about is the fact that, look, this is a country that's been split right down the middle. And it turns out that, and if that middle, one of those middles sometimes gets bigger and the other one gets smaller, and sometimes one gets smaller and the other one gets bigger. But it is two middles, it is two halves. And something that, and it's entering into a period in which the only stable way which significantly reduces the possibility of very costly conflict is some type of agreement, some type of understanding between the different parts. And what I'm concerned is that we're going to go into that period where the opposition is going to win the parliamentary elections and is going to be calling for a recall referendum. The government is going to try to avoid that, and the Supreme Court is probably going to side with the government. But it turns out that the opposition can use the 2003 law to expand the size of the Supreme Court and name new Supreme Court justices by a simple majority, by expanding the Supreme Court. But of course, the existing Supreme Court is going to say that they can't do that. So Congress is going to go ahead and name 40 new Supreme Court justices, and they're going to turn up in the Palace of Justice, and the guys who are inside are going to put a padlock on that palace, not letting them in. The point is that this is the setting, not this year, not right now, next year. That is the setting where you have the risk of true political conflict, of true confrontation between two sides in which there are many people who are willing to fight, not just for power, not just to get power for themselves, for the groups, or who they represent, but to ensure that the other ones do not have access to that power. And that's where what I'm concerned about is the Venezuela's lack of institutions of conflict management that can help it mediate that conflict, of people who can effectively be able to sit down, people from both sides of the table, and institutions that are able to effectively mediate a solution in which, and if we go towards a transition in which governments do what they should do, what they should always do, whatever government Venezuela has, which is represent the two halves of the country and not just represent one half. My concern is not, I think that the opposition has a good chance of getting to power, and I think that the opposition, if it gets to power, is going to do everything possible to do the right things in terms of economic policy. But I'm not sure whether that's stable, because in order for that to work, its political project has to be a project where it includes the other half. And I think that a lot of the political project of both sides is one that denies the existence of the other half. The political discourse sometimes of the opposition is very close to this idea that Marxists called false consciousness. If the poor are voting for Chavismo, it must be because Chavismo fooled them. They don't accept the idea that there is a true representativeness, that people do feel that they're empowered through Chavismo. And if you don't accept that, then rebuilding Venezuelan society is going to be very difficult. That's my main concern.
So if you needed something else to keep you up at night, there you go. Do we have any questions? We have 5 minutes, maybe 1 or 2 questions. Yes, ma'am.
I have one of them, Mr. Rodriguez already answered, but I have 2 more. One is kind of related to the last intervention you just had, and it's regarding the flawed and actually illegal legal environment in Venezuela. The other one is something that we haven't named, and it's like the big elephant in the room, and it's for me at least, the external intervention from Cuba. So within the whole economic environment, how do these 2 elements influence on our economy and our society? Because obviously, when we have such violence and all over, from all sides, how do we manage that, and how do we get a country going? Thank you.
Are we going to take several questions, or just go
Uh,
one-on-one, or?
Well, let's
or
try.
okay.
Let's try to give Cliff Notes answers to these questions, so we can maybe get two. Guillermo, yeah. Okay. So yeah.
Hmm? Look, I mean, I think that you touched on two very important problems that have to do with precisely with how we reconstruct Venezuelan society. I put a lot of emphasis on issues like relative prices, like devaluation, like adjusting gasoline prices, not because I don't think that the other problems are important, but because I do think that it's necessary to solve the basic economic problems of governance, of averting an economic crisis and giving some type of macroeconomic stability so that we can center on those problems. But yes, and there's been a huge deterioration in the quality of Venezuelan justice administration, in the quality of Venezuelan institutions. And I think that there's also been a strong kind of lack of definition of what's the, you see, the problem is not so much, I actually don't think that the Cubans are kind of that much involved in decision making in Venezuela. If anything, it's the other way around. Cuba has survived on a Venezuelan subsidy. I mean, the people who are paying the bill here, in the end, the one who gets to talk for longer at the table is the one who pays the bill. Venezuela has been paying Cuba's bills. But what I think is the fundamental problem is that this gets mixed up with the basic understanding that Venezuelans have of how it is that their state is governed. Look, there are many countries in the world that carry out foreign aid, and foreign aid is generally unpopular wherever you do it. And politicians have to spend a lot of political capital explaining why it is that they're giving money to other countries. I mean, that happens in Venezuela, that happens in the US, that happens in Russia, that happens everywhere. But the problem in Venezuela is that the discussion about that isn't even transparent, because we don't even know how much foreign aid we're giving to these countries. We know that we're giving them oil and we're lending them at some rates, and we kind of do, and if you spend a lot of work, which I've done, you can actually get at a valuation of that type of subsidy, but it's all very obscure, it's all very opaque. So here's where I think that this kind of dovetails with the basic problem. When Chavez came into power, the majority of Venezuelans and the people who supported Chavismo did not feel represented. Chavismo's solution was to build a narrative in which the people were in power. But part of that narrative actually implied making the government much less transparent, and therefore making people less able to make their government accountable. So the solution so this is one of the puzzles that we have to solve in Venezuela. How is it that we make the government accountable to Venezuelans without going back, and without being perceived as going back on that fundamental commitment of social inclusion, which is the one thing that Chavismo has brought to the table? And my view continues to be that unless we try to go for a mixture of those two things, I think that the government, that it's very unlikely that whatever the government does is going to be stable.
Okay. One more. Yes.
Thanks. Hi. My question is to Francisco. I'll be quick. And it's regarding and thanks so much for being here. It's great to meet you in person. This is regarding your recent rise to prominence, if you will, in Venezuelan public opinion. You've come out, you've given many interviews, you've written many articles coming out very strongly with this economic argument that Venezuela should not default, and by freeing up dismantling the exchange rate, you can free up enough resources to begin to put the economy back on a sustainable path. Some people who actually agree with your argument, they question, however, why you have remained almost completely silent on other social and political issues, like, for instance, the very sad state of our democratic institutions, or repression on the streets, or human rights violations, or the almost complete lack of free press. So while focusing almost entirely on an economic argument. I know you're an economist, but you can take a look at the other structural issues as well, if I could get your comment on that. And as a quick follow-up, some people go further, as was commented before, and say that you are maintaining this posture precisely because you want to become the next finance minister.
Mm-hmm.
Thanks.
Mm-hmm. Yeah, sure. Okay, great question, and thanks a lot for the opportunity to answer it. Look, I think that what and obviously there's an obvious answer to that, which is that my job is to assess economic policies. And I cover Venezuela, I cover Colombia, I cover Peru. And in none of those countries do I assess their human rights policies as part of my job. I assess their economic policy because I make an assessment as to the sustainability of these economies. And therefore, when I talk about what the economy should be doing, it is relative to that assessment. As a Venezuelan, I feel profoundly sad about what's happening, and I feel that there have been significant abuses that have been committed by authorities, and I feel that those abuses are wrong, and I feel that we Venezuelans should reject those. I also think that we live in a context of political conflict. And in this political conflict, which is a conflict that has been ongoing for a very long time, and which is getting worse, I want to think about solutions. I want to look forward. The way in which I talk about the economy is the same way in which I would talk, and I will talk about all of the other issues, which is, look, if we spend all of our time blaming the government that brought us here for what's happening, we're not helping the Venezuelans who are in the lines. We're not helping the people who can't get formula for their babies. And let's look at what can be done and which of the things that can be done are consistent or not, or acceptable to the people who actually get to take those decisions right now. And let's also inform political debate as to those decisions, so that the people who are thinking on the side of the opposition can also ask themselves questions like, should we be thinking about defaulting on the foreign debt, or is that maybe not that good an idea? And what do we do if we get to power? Do we try to solve the exchange rate problem, or do we try to maintain exchange controls and not do anything else? And I think as a Venezuelan that the way in which we're going to get out of the situation of political conflict is by looking and by creating avenues and of dialogue in which the different parties, the different sides that have been in confrontation during the past 15 years can effectively create a country in which each other is included. So I think that a society should assess and should assign responsibility for every single human rights violation that occurs. And the one thing that I would most like to see as a Venezuelan is that the country creates a transparent human rights commission that is effectively able to investigate every single potential crime that has occurred and is able to put those persons responsible for that in jail, wherever they come from. That is my position with respect to the human rights violations. Now, I also want to solve these problems. I want to have a country where Venezuelans can have prosperity, can have equity, and can have peace, and can live together with each other without thinking that they're part of two sides that are at odds. That's the country that I want to contribute towards building.
Okay, so I want to thank my panelists for having such a candid conversation and a thorough conversation. I think it was really helpful and insightful, all of you. And thank you all for coming tonight. Guillermo also.
Yeah, thank you all for coming. Thank you, Jaime. Thank you, Francisco. Thank you, Katia. And thank you, Alejandro. We're probably going to do a second one after the elections to see the outlook of Venezuela. Thank you again. And thank you all for coming.